Hey, everybody. Thanks for checking out another episode of the Aaron Advantage podcast. Today, I am joined by probably the most interesting guest I've had year to date. The only guest I've had year to date, Mr. Daniel Woods with Goosehead Insurance.
That felt good until you said that.
Well, I'll be real honest with you. You're probably going to be the most interesting, which people aren't going to believe after they hear Goosehead Insurance, because what is interesting about insurance?
It's really hard to talk about all over and over again. I get caught in BNI having to do the presentation like, man, what am I going to talk about? And then you talk about stuff like, it's interesting. I never knew that. So insurance in my world is mostly boring.
Right.
But most people don't have an idea of what it all is, so it's very interesting to them.
And I think the truth of the matter is people think of insurance as, oh, it's that thing I gotta have, but they don't know anything about it. They don't ask any questions. They just go, hey, what's it going to cost me? And then they move about their business without any real understanding of what their coverage is or what their deductibles look like or anything else.
It's the one business where, a lot of people who have insurance get it from their parents and then pass it on, and they buy their first house and they're like, well, I just got it from where my parents have it, and I've had it with the same place, and they never looked at it, but my mom and dad told me it's good, and I have full coverage or liability. People think that's it, and really it's in auto is pretty simple from most standpoints, but people have no idea what full coverage and liability even entails. So explaining that to people is part of my job and what makes it interesting. But you'd be surprised when people have zero idea what their auto insurance has.
I wouldn't be that surprised, unfortunately, because, so in real estate, it's unfortunate. I tell people this all the time. By the time I'm working with somebody who's buying a house and everything else, it's a little bit more difficult for me to make those referrals to insurance agents, because people have in their mind, well, I've already got somebody. I have my car with this person. I'm just going to put my homeowners with them. Or, my parents have always had this, so I'm just going to stick with that. And I don't think people realize there may be better options at cheaper prices.
And I think people get caught up in the thing of, well, I've always bought from the people that my parents have had, so I'm going to go with them. Or, hey, I don't want to mess with anyone. I have Progressive, or I have Geico, or I have something online. I'm just going to go online and get a quote, not to deal with people.
Right.
Because in our transaction, you can deal with a lot of people, and however you can make that simple. Sometimes people are just like, I got a quote from Progressive online. My auto's been with them. I'm easy to deal with. It fits in with my mortgage.
Right.
I'm just going to move on, and that's it. And sometimes you're like, no, you probably shouldn't do that.
You just said something right there that made me really think about this. Is it fits in with my mortgage. And I think when home buyers are in the process of looking for a new home, especially if they're not putting 20% down and they're getting a program that requires them to escrow their homeowner's insurance and escrow their taxes, they may not realize that insurance premium they got to pay may actually have an impact on whether or not they may be able to buy a home.
It is very interesting, and I've gotten, the more I've done this lately, I have to, because there's just so much. By the time someone buys a house, sits with a mortgage, goes through all that stuff, I say, hey, your homeowner's is going to be $1,200 for the year. What do I pay that? No, so it's in an escrow account with your taxes and your insurance. And they've been told that by probably their real estate agent or probably their mortgage, but until they actually find out where that money goes or how it paid, sometimes it doesn't click for them. And so you can say, hey, it's $1,200. It's part of your closing cost. Mm-hmm. You're actually going to pay that monthly broken down of $100, and that's going to pay for next year's insurance.
Yeah.
And so once you explain that to people, they're like, oh, okay, that makes a lot more sense.
Yeah, and paying that up front is something that nobody takes into consideration. I'm like, hey, how do you think your house is going to be insured if you're just walking in not with a policy in place?
The banks are pretty smart. What people sometimes fail to realize is the bank owns that house. So they're going to require what insurance is on that house, because
100%.
At the end of the day, they just lent you $300,000. Yeah. You put in $15,000-$30,000. They're like, this is our asset, not yours.
Yeah, we want to make sure that if this thing burns to the ground, we're covered, not you.
Yeah, as much as you feel like this is yours, it's actually ours. Thank you.
Yeah. So Goosehead Insurance is the company that you work for, and I've been in real estate for 16 years. Goosehead Insurance isn't a company that I was familiar with until I met you. We've got the State Farms, we've got the Allstates, we've got the Progressives. These are the nationally known, big name, big brand companies that are out there. What makes Goosehead different than some of these other companies maybe that people are more familiar with?
So it's the biggest thing about Goosehead is we are the largest broker in the country as of right now.
Nice.
We have 2,200 agencies across the country. So it gives you the flexibility. Right now in Indiana, I have 45 to 50 carriers.
Yeah.
So you can shop around for the best rate. We have 7 of the top 10 auto carriers in the country right now. We're constantly adding things. So for us, what makes it different, I will never say better, because like I was at Farm Bureau for a long time. I like Farm Bureau. State Farm, people have good relationships with people locally. I have never an issue with that. So my thing about Goosehead being that we do 99% of our business is home and auto.
Yep.
We're not trying to sell life insurance. We're not trying to sell a bunch of commercial. We stick strictly in what we're good at, which is home and auto. And so having the choice, I think choice is such a big thing in insurance now.
Yeah.
You can, especially with, the market's changed, things are tight. Sometimes people need to save a little bit of money there, but also being able to bundle. And sometimes that bundle means I have a different home and auto carrier, but it's in the same agency and we get credit for that. So our flexibility in our technology is what I think makes us different from everyone right now.
Yeah, and I think the fact that you're a broker and have all these different carriers that you can choose from is something that, in this industry, a lot of people just go to the big names and they don't realize the big name has the carrier. That's it. That's all you get. It's you fit in this box or you don't. Whereas you have the ability to say, hey, I've got these multitude of different people that I can shop you through to try to find you what works best for your situation.
Yeah. So, just take today, for instance. Someone made an offer on an $84,000 house.
Yep.
So we're going to insure that $84,000 house replacement cost. It's going to be $175,000. That fits with them. They don't have their auto because they don't need it. What their work requires them not to have it. Yeah. So then another person I have is buying a $650,000 house. We're insuring that for $1 million. So we can put those with 2 different carriers and also give them different coverages that they need. And I think that's the biggest thing is, price is always important, especially when you're buying. People always want to know. But coverage too, because, everything's volatile in our world right now. Mm-hmm. Coverage is something that people should know more of. And having that flexibility to make sure that, hey, you fit in this box, but you fit in this box today. And having that ability, if it does go up 17%, you can shop 40 carriers again next year.
Yeah. That you said a couple of things that I really want to dive into a little bit deeper, because most of the time when people are thinking about their homeowner's insurance, it's only when they're buying a new home or only when they're buying a new car. They're thinking about their car insurance. But you talked about replacement costs. So everybody, when they're getting their new home, they need to insure that for the replacement cost, because what your home is selling for is not necessarily what it's going to cost to rebuild if something would catastrophically go wrong with a property. So you got to have that replacement cost in there. Now let's talk about people who have lived in their home maybe for the last 10 years.
Yeah.
I don't know if anybody's been paying attention in the real estate market. If you've been watching me, you have. But values have gone up tremendously, and cost of replacing a house or cost of building a new home has also gone up tremendously. So you might be sitting in a house that you've had insured for 10 years that you've never really looked at that. There's probably a lot of potential for people to be underinsured right now.
Oh, I think replacement costs, especially during COVID where the cost of everything was through the roof. I think the hard part is people see their rates go up too and they get mad.
Yeah.
You bought a house for $100,000 in 2009.
Right.
Well, that house is probably worth, if you sold it today, $220, whatever. It could be doubled in value.
Right.
Well, that insurance company, part of your rates going up too is also insuring your home for more. Mm-hmm. And sometimes that can't even catch up with the rate of inflation. That house to rebuild, it's hard to find a house to rebuild for under $200 a square foot. It's almost impossible now.
Yeah.
So replacement cost, especially if you haven't looked at it, a lot of people just don't look at it, right?
Yep.
Hey, you bought this house for $300,000. It's probably worth $5,000. You had to rebuild it, probably $7,000. You have $400,000 in coverage.
Yeah.
That would be if they ever had a total loss. And total loss, when people actually start looking like, man, this really does. It's a lot more than what you think.
Right. Yeah, and I think that's the thing that most people never take into consideration, and something that as a real estate professional I like to remind my clients of, and it's on my list. When I sell somebody a house at the 2-year mark, it's a reminder of, hey, it might be a good idea to shop your insurance. Make sure, even if you're not looking at a different carrier or you're not looking at a different agent, making sure that you're at least covered where you need to be is something you need to take into consideration.
Think about your life changes too, right? So if, especially like in the auto. When I first got married, so 6 years ago, I wasn't married. I, didn't have a house. Next thing you know, my wife and I have a house, 2 kids, different mortgage, all these different things. So our needs have transferred. My liability didn't matter as much then as it does now.
Right.
So if you don't ever look at that, you're like, well, nothing's changed. I think looking at it from that perspective, and also, updating with your life too is very important. your deductible when you're 25 years old, $1,000 is a lot of money.
Right.
As you get older, you're like, you know what? I'll save a little bit more on this end. I can take a little bit more risk of, hey, my deductible is $2,000, but now I've added mine subsidence, or I've added earthquake, or I've added water backup, because I think these things, some of these things are more important in your home versus what they were in someone else's home.
Yeah, and you just hit on some things that are always, the requirements that I need to have to remind people to check with your insurance agent on these things. Mine subsidence, water backup, all these things. People don't realize that just a typical homeowner's policy may not cover all the things that could potentially be a hazard in the area where they live.
And part of the contracts, not to nerd out, but there are different policy forms.
Yeah.
HO2, HO3, HO5 covers different things. And so if you have a policy like, hey, it's $300,000, that's what we need it for, but I've got a 1% deductible, I've got no earthquake, I've got no mine subsidence, I've got no water backup, where this other one, hey, it's $1,200, $200 more, but I've got water backup for $10,000. I've got full replacement costs on my roof and my siding and my personal property. I've got mine subsidence if I live in Warwick County. Like, those things are, and that's why, we talk about getting people in to have conversations like, hey, it's a free market analysis or free quote. We really just want to educate people. I'm not trying to sell against the state farms. I'm trying to sell against the people who have never met or talked to anyone.
Yeah, and that's the thing that I've been most impressed by you with, is the fact that you talk about the education of the consumer. And that's, the mission of my team is to educate the consumer, to make sure that they're the most informed they can be, to make it less stressful when they're in a position to buy or sell. And I think that there's so little education on that. For example, I won't put my buddy on blast here. I won't say his name, but I have a friend who purchased a home, and he is a real estate professional himself, and he wasn't from Warwick County. He's not from the area. We were talking about another home that was listed in a subdivision not far from where he lives, and it had massive mine subsidence damage. And I was like, man, yeah, that's something that's really common in that area and all this stuff. And he's like, oh, is it really? And I'm like, yeah, you have subsidence coverage, right? He goes, no. And I go, what do you mean no? He goes, I didn't know anything about it. And I'm like, see, that's the kind of thing that I take for granted, because I've been doing this for so long and learning that stuff, that there's not a lot of education out there. Like you said, Warwick County, ton of mining. If you're in Newburgh and you don't have subsidence coverage, you should consider it.
You better have questions. And the maps are so outdated because it's such an old thing. So I've always told people, ask a realtor first off. Yeah. They've done a ton of transactions. They have the area pretty well. I said, ask a neighbor who's been there for a long time. Most of the time they know. And here's the deal. If you see a stripper pit by you, have mine subsidence. If you see just a massive deep pond, you need it, because there's mines all. I mean, there's nothing else you can have. I mean, think about earthquake. I mean, the last time a claim of earthquake has happened in this area, long time. Right. You can go to Warwick County right now and find 20 homes. Mm-hmm. I mean, Quail Crossing has a house that is condemned, I think, on the property that had a mine issue. Like, there are very few risks like that around here.
Let's put it this way. If you live in a county that has a coal mine road, you probably need some subsidence coverage.
At least look at it and understand what your coverages are, too, because I think people, understanding your deductibles, your coverages, and how those things go too, can make an informed decision. Like, hey, if this is going to cost me an extra $500 a year, I'm okay. I can make that decision. But if it's $80 and it covers my house, that'd be a really tough pill to swallow, losing your house over $7 a month.
Absolutely. You talked about knowing your coverages and understanding the difference there, and that's one of the things that I think a lot of people also don't take into consideration when they're comparing their insurance policies. Not all policies are apples to apples. You may have apples to oranges, you may have apples to bananas, you may have all kinds of different things that you can take into consideration. You talked about, total replacement cost. These are things that people don't take into consideration, after years of doing this, total replacement versus actual cash value versus depreciated value. There's a lot of variations that probably go into the selection of the appropriate product.
House especially. Auto, there's basically not a ton of variance, right? No. Liability, comp, collision, medical payments, windshield. Like, other than that, there's not a lot.
Right.
But you're talking in this area, you need to know what your replacement cost is, what your house is. Do I have guaranteed replacement cost? Do I have 1.5 times? If I have a loss, because if you have a loss, you cover structure, personal property, loss of use, liability. All those things are included. And if you start cutting down, you can cut down on something that doesn't move the premium very much.
Right.
If you move the liability from $500,000 to $100,000, it's like $10 a year. If I raise my deductible from $1,000 to $1,500, that's $100 to $200.
Right.
Like that means I just took on $500 more in risk. I'm okay with that. I just lowered my liability by $400,000 for $10. Like it wasn't worth it.
Right.
So I think that when you start looking, and I would tell you the same thing you and I have talked about. We said last week, realtors that we know. Mm-hmm. You're like, hey, good realtor, always been around, good transaction. Same with me. Like I worked at Farm Bureau for a long time. If somebody says they have Ron Kemp as an agent, or somebody that has, Rich Royalty, they've had people around forever. Those people are writing good policies.
Right.
They may not be the best situation because they don't have the product that goes there, but they're almost never going to put people in a situation where they don't know what they have or they wrote it at less than what it should be. Right. Almost never. And that's why I always say, like, you have Farm Bureau. Like I came from there. I like Farm Bureau. I still talk to people all the time.
Yeah.
You have an agent, have someone you trust.
Yeah.
That's in our world, I think it's the only thing that matters. If that person has your best interest, you're in good shape.
And that's the most important thing. And I think the thing that, I have to remind people is we live in a day and age, and, in the real estate industry, as realtors, we don't have this as much as lenders and insurance people have. You have these online companies that have these massive marketing budgets that they just spend all this money to try to bring people in, to get them signed up. And those people then have nobody they trust. They've got a faceless name. They've got a policy with no agent they can turn to. And they're putting themselves in a position where they probably don't understand their coverages or anything else. And that's where I see most people getting themselves into a position where they're going to end up. You never know how bad you have it until you're in a catastrophe or you're in a situation where there's a problem. And that's not the time where I want to find out how crappy my coverage is.
There are very few people outside of lawyers and engineers who ever care about their coverage unless they have a loss.
Yeah.
And that's the hardest thing, because sometimes people in our industry can oversell based off of worst case scenario.
Yep.
Sometimes it's just like, no, I just saw a guy who didn't have enough insurance on his house, and now he's going to have a hard time replacing that. Yeah. That's a realistic, I've always said the hardest conversations are never that losing people on price, because that's okay. There's been times where someone said, I thought I had this coverage. And you do everything in your power. Like, did I document this?
Yeah.
No, you did. Here's where we, and they're like, oh, I didn't know that. But it's very hard. If you're constantly doing the right thing and you're always having people's best interests at heart and you're following up and doing the right thing, you do everything you can with that. And then from there, you have to be able to trust that you're doing the right thing and educating people and giving them the opportunity to make that decision.
I couldn't agree with that more. So I'm going to change the subject a little bit here because this is something anytime I have an insurance agent in, I always like to find out the funny stories, the crazy stories, the weird things that you've had to cover. J.K. Simmons is the spokesperson for Indiana Farmers, I believe. We've seen it. We've covered it as the slogan they have, where they have, he's basically walking through a museum of crazy stuff where there's like a moose in the pool or other things of that nature. So if I had to ask you to date, in all the time you've been in insurance, the craziest loss you've had or the craziest thing that you need covered, what would be the thing that comes to mind that makes you really think, wow, I'd never really thought that would be something I had to deal with?
Let me think. The craziest one I've ever had. Here's a good one for you. I was quoting one of my good friends, and he had a quote from someone else, and I said, you need to put water in there, water backup. He's like, no, I don't. I said, you have a finished basement. And he's like, and so I did it. We covered for $15,000. 3 weeks later, after he bought a house, literally has a $12,000 loss, only because his father-in-law, he would have never bought from me if it wasn't that.
Oh man!
So that was one of probably my moment where I'm the happiest. Jewelry's my least favorite claims.
Oh really?
It's the hardest because it's. Here's one I'll tell you that here's the hardest thing I have to do in insurance. That's the worst conversations in our world. If you or the spouse or someone in your house backs into your vehicle, you have to pay both deductibles.
Yeah.
And here's why. And you can never explain this to people because they think it's the dumbest thing ever. Your liability covers the other vehicle.
Yep.
You can never be liable to yourself. So you can't ever sue yourself. So in that case, these people, I promise you, you can explain it 100 times. And it's the worst conversation every single time. I hate that. And there's no good way around it. You can't be liable for yourself, so you have to pay both deductibles. But outside of bad losses, in the home and auto world, it's not that bad.
Yeah, that's true.
I mean, most of them are, wind,
We don't have any of that around here.
hail.
None of that either.
Hail, everybody that knocks on doors and tells them they have hail damage.
Oh, yeah. Gosh. Every day.
I don't think I have anything great outside of that. I don't have any no art, no jewelry, nothing fun. I'm sorry, that's a terrible answer.
Well, honestly, that's not necessarily a terrible answer because all that tells me is that, hey, we really specialize in what we do best and we're not dealing with this other stuff that isn't our forte.
Yeah, well, you get in farm and commercial.
Yeah.
Farm becomes a tough one because you're blanketing all these things. In our world, it's knock on wood. I wish I had some wood to knock on.
Leg of the chair.
I don't have anything bad right now, so I don't have. It's a terrible answer.
I'll take that. That's actually a good answer in my opinion. Is making sure that you're not in a position where you have crazy things to cover is, not necessarily a bad thing.
No, now it's gonna happen. Now I'm gonna get a phone call next week, and it's gonna be like, hold on. So I have this loss. It's not gonna be good.
Yeah. So I gotta. Unfortunately, Kendra, if you're watching this video, I am gonna put you on blast a little bit here. But I was very fortunate that when she rear-ended me one time, there wasn't any damage that we had to make a claim on because I actually am aware of the fact that I would have to pay both deductibles. So luckily, nothing happened to either of our vehicles. We got lucky. But yeah,
you can ask Carly. She backed into mine. She backed into mine, and we were able to fix mine without having to do anything. But that was when she walks in from going to work, I knew that look on her face.
You knew the look was not a good look.
And there's nothing you can say because you're the worst person ever if you make it worse. And the whole time you're just sitting there like, I parked behind you for 5 years. Like I parked next to you for 5 years. This car's never really moved.
Yeah,
that's a tough one.
Whenever it happened to me, I was just like, I mean, how do I get mad about this? I can't really. Yeah,
you just gotta sit there and be like, man, this
is a no-win situation. I'm just gonna chill.
Absolutely not.
Yeah. So, I have one question that I always ask insurance agents that you kind of already answered, and that was going to be for any kind of additional riders that people might need for like jewelry and other like high-end art kind of things. But that's kind of the stuff that you wouldn't recommend that you're the guy for that. Would you farm that out to somebody else?
We take that. We take those in terms of. Here's what I will tell you, and this is a thing that I didn't know as a captive. I know now.
Yeah.
And I've had this happen. So if you put your jewelry as a rider on your home policy, which 90% of people do, if you ever file a claim on that, it goes against your home for 5 years. There's a company called Jewelers Mutual, which the standard of the standard in everywhere. Every jewelry shop in town probably uses Jewelers Mutual.
Okay.
So they've been around forever. I talked to Drosty, and he asked me a price the other day. He called me a couple months ago and was like, so what's the price? Like literally like $10 per thousand. He's like, it's been the same since like 82.
Yeah.
So I will tell you this. If you cover it through Jewelers Mutual, not on your home policy, you get theft, mysterious disappearance, and you get it throughout the country. If you ever file a claim, they work directly with the jeweler to replace that back to it.
Nice.
And the jewelry policy, like, $10,000 wedding ring, $100 a year. But the thing is, if you ever have a loss of jewelry, it's the worst loss you can have because you can't prove it.
Right.
Right. So like a guy has a $12,000 Rolex.
Mm-hmm.
If he gets desperate, hawks his Rolex and turns it on an insurance claim, he can double dip.
Oh.
Where if you have a loss of your car, like for the most part, they're paying the body shop now,
right,
or they're paying the roofer to fix that. But that claim of jewelry hurts your home rate for so long.
That's crazy.
So changing that out, and also I would say boat. When I was a captive, boat insurance was always on the policy because it was part of the liability. It's a little bit more expensive, but you get better coverages, and it's covered more like an auto than an extension of your home.
Gotcha. So
I would say if you ever have the opportunity, separate those things because a loss will impact your rate for a long time.
See, that's good to know. I don't have an extensive collection of expensive watches, but I have 16 different watches, and everything's just covered under my jewelry policy and everything else. So I'm thinking that maybe I need to change that up and get a separate jewel. Was it Jewelers Mutual?
Jewelers Mutual will do it, and they'll individually do it. You don't anything under 10,000. They don't require an appraisal either.
Oh, I've got several things under 10,000.
Me too. I don't have anything over 10,000. So that's if it changes. I mean, I guess I will. But that's part of knowing and understanding. Like being captive is one thing. And State Farm has the industry leader. Farm Bureau is a top 3 agent or a top 3 place in Indiana. All states. You're talking about these behemoths of what they are, the standard in our industry.
Oh yeah.
But I think the greatest way to look at it is if insurance started today, captive probably wouldn't exist.
Right.
And nothing against captive. Some of the best agents I know are captive, and I will defend them forever. But it's probably not the way the insurance industry goes from here on out.
Yeah, and I think that's the most important thing is, when I look at when I'm talking to lenders and things at times, sometimes a broker is the better option because I may have a buyer that doesn't fit into a specific box that they need to for the financing side. Same thing with the insurance. There may be some things that you need to look at, and the captive agent may not have all the best options for all the things necessary for somebody. And I think that the most important part of this podcast really is making sure that people are aware that there are those differences and there are other people that may be able to help them in situations if they're not that perfect fit to that perfect policy every time.
Yeah, because if you're like my mom, she's 65 years old. No, she's my client. She also works for me, so it's a good thing. But if
she looks fantastic for 65, by the way. I just met her for the first time.
She's in there,
My
just
goodness,
retired.
I'm gonna have to tell her.
Spent 40 years in the medical field. Now she comes and works in my office. It's pretty good. I'm happy for her, truthfully. But so for her, it may have been a better fit to stay at Farm Bureau for the longest time. Now she can call me and go, but there was a place down the street from her. She could walk in there, and people want to pay their bills. And for there's a perfect place for a lot of people like that who want to be able to meet with their agent once a year and want to be able to go and pay their bill because they want to pay it monthly. And that's how they've been able to do. And I will always say people, there's no right way to do anything because what fits for me doesn't fit for you maybe.
Absolutely.
And so that's where hey, if you want to go meet with someone and be able to go get coffee and do that, that's a great place for you to be. That's probably not me right now.
Right.
But that's okay.
Yeah, but on the flip side, for the people who are scared to, not necessarily scared, but the people who don't want to go in and sit down with somebody, that don't want to have the hassle of having to have a meeting to get their insurance done and everything else, maybe that's where the Liberty Financial or the Liberty Mutual and all these other online things seems like the better option. That's where you're also, in my opinion, awesome with clients because, here recently I had somebody that all I had to do was share your contact card from my phone to theirs. And I didn't even have a chance to let you know, hey, I'm sending you a referral. But bam, he got a hold of you, got it taken care of. Same day, no hassle, no stress, nice and easy.
Here's a few things I will tell people from the brokerage side that's probably a known fact. Progressive would rather me sell their policy than them sell their policy.
Yeah.
Because by them paying me that 10% to be able to write that policy, handle that, they no longer have to service that account.
Yep.
And so the models originally were direct to consumer. Mm-hmm. That was how everyone wanted to do. Geico, Progressive, Liberty Mutual, Safeco. Guess what they've all done? I have every one of those carriers except for Geico.
Yeah.
So the direct to consumer route's great until you have consumers calling you for complaints.
Right.
But if you don't have anyone to handle that, and not everything's a claim, not everything's a billing issue. Sometimes it's hey, I'm adding my son to a policy. He gets his learner's permit. Does he need to be added on my policy? No, in the state of Indiana, he doesn't. Not until he can he drive. So that direct-to-consumer route where people, I just go to Liberty Mutual. Well, hey, if you put a link in, I'll give you a link right now. You can shop 45 carriers and that goes directly to me and you won't get a phone call from anyone else.
Right.
So that direct-to-consumer, I think that's where Goosehead has kind of had the best marriage of it.
Yeah.
They don't want to. They've really,
it's kind of an innovative strategy to say, hey, we have all these people. Let's say it's Liberty Mutual or somebody that we're direct to consumer. It's like, hey, now I have to build a facility to house all these people, to take care of these service calls, to pay all these employees, to be on the phone, to do all this stuff. Or they can say, hey, like you said, I'll put my service out there for a broker to be able to utilize what we offer, where we specialize in the actual coverage to make sure that people are taken care of. But then we've got boots on the ground that aren't in our facility, that aren't in a position where we have to be the ones who are monitoring what they're doing. It's innovative, thoughtful process of making sure that we are getting more effective and more efficient as technology improves and allows us to do those kind of things.
I always say we're Amazon.
I love it. Yeah.
Like State Farm's Walmart. Cast a huge net. People want to go in there and do that. Farm Bureau may be Target.
Yeah.
But like Amazon, you can go buy direct. You can literally go straight to Liberty Mutual and buy that if you want. You can go buy products off Amazon, but you can go directly to the consumer and it's the exact same. You can go direct to the manufacturer. It's the exact same price with no reviews and nothing else. And I keep hitting this for the third time. I'm sorry.
It happens.
But that's where I think that's where that's kind of marriage has evolved. Like, okay, like we distribute more. It's a volume. Same with real estate.
100%.
Right? Like if you have 4 clients, it's really tough to make a living.
Yeah.
But if you can do 4 transactions a month, you can have, it's there at some point in time, you have to get volume to be able to regulate. And I think that's where insurance is going. Volume is where it's king in everything right now.
Yeah. And even with that volume and everything else, I think the thing that is still going to be king, which helps brokers like you continue to make sure that you're building a business and everything else, like you said from the beginning, it's the relationship. Because ultimately, whenever you're insuring your largest financial investment in your life, you want somebody you can turn to most of the time that you can trust to answer those questions, to be able to help you through the process. Like you said, the loss is the time when people really are most concerned about their coverages and everything else. And who better than the person that you trust to be able to turn to and have those conversations when you're at that really stressful point in your life.
And it's been huge for my business because I don't advertise. Yeah. No one knows who Goosehead is. I would say, never.
I've been in the business for years, and until I met you, never heard of them.
I bet in the year and a half I've had it, I've said Goosehead, and maybe one person like, oh yeah, I know who they are. No one has any idea. I work in a closet.
Yeah,
but here's
it's a nice closet.
It's a very, very nice closet. Yes, Dusty, I appreciate you furnishing it for me and leaving for me. That was very nice of you. But you talk about important that referral base, someone trusting you to give the insurance because we're able to have it. We're able to see coverages. That and having a face. I'm in Evansville.
Yeah.
90% of my transactions are within a 20-mile radius.
Yep.
So if someone needs me to come out there or come in, we can have those conversations while also having that. But yeah, relationships. It's so much easier to be able to hand someone to them and say, hey, I trust this. This is what he's going to do. He's going to be able to take care of you. Mm-hmm. And that's where I've been able to build Goosehead to a brand of, no one still knows about us, but we don't advertise, but we're able to, and we have a good backing of good carriers behind us.
Yeah. And that's the thing that, in my business, I tell people all the time, I've been in real estate for 16 years and I have lenders that want my business. I have insurance agents that want my business and all these things. And I say, ultimately when I am giving somebody your name as a referral, that is my endorsement of who you are and what you will do. And I'm not comfortable putting my name on somebody's service without knowing who they are, knowing that they care about my people, and know that they are knowledgeable and effective at what they do. And, getting to know you and everything else, super apparent to me that, hey, if I have somebody who has an insurance need, Daniel's on my list of people that I can trust, that I can say, this is who you need to talk to. Make sure that you're getting in front of him and finding out what he can do for you.
And that's the hard part of our business, right? Like, I'm always on the back end of every transaction. Yeah. Like, you are finding someone who then is probably getting to a mortgage person who then needs insurance, needs title, needs all these things. I'm on the back end. So like when I first got in the business, I'm like, how am I going to ask for business from lenders? And then I'm not going to be able to give anything back. And then I got some great advice from a couple of people that said, look, if you don't close the deal, none of us gets through. So the realtor doesn't get paid. That person doesn't get the house. The lender doesn't get paid. The title company gets no business. So at the end of the day, like, my job is to make sure it gets through.
Yeah.
And that's where, I'm never going to give 10 referrals a year to lenders. It's just not hard. And I have a couple that send business like, I only have one mortgage. Right. It's really hard to be like, hey, I know you helped me out, but so, you try to do everything to help close that deal. And same with you. Like, as you pass it on, like, hey, I know this is going to get done the right way.
And that's a thing that I don't think people take into consideration. You just named, 5 different vendors who are involved in every single transaction that have to work together to make sure that we can get it all pulled together. So all of us have the opportunity to close that deal and make it happen. And I think that's why having that trust of other professionals and having the ability to build that relationship is why it's so important to continue to do the right thing.
Yeah. I mean, I had 2 different people. I had one person sell my house and I had one person buy. Bo Tucker, by the way.
Let's go, baby.
See, I know you're a Tucker man.
I wasn't even going to ask, but I love it. It's even better now.
Mark Hepner.
Mark Hepner's the man.
His wife and I were friends from high school. I've known him for a long time.
Yeah.
Stephanie Morris has been in my BNI group for 7. Stephanie, I've never met anybody that says bad things about Stephanie.
I haven't either. I've known Stephanie. It's funny. So Stephanie and I got licensed around the same time. We were actually in the same new member orientation class together when we first joined the IRMLS. No. Southwest Indian Association of Realtors. Too many associations. They all kind of jumbled together at some point.
Hey, she cares about people a ton and making them successful. And
absolutely.
I really appreciate her, how she does.
Yeah, she's phenomenal at what she does. I've been able to work with her for a long time, and she and I, everybody at Tucker, to be real honest with you, we have that same kind of mentality of making sure that people are taken care of first. And when you put people first, it makes everything so much easier.
That's such a good answer. You've been rehearsing that?
I have not. I didn't even
put people first.
I'll be real honest with you. I didn't even know what we were talking about today. I came in fresh. That's just that's my mindset. That's what I take care of. That's what's always been my philosophy. You put people first, the rest will follow.
Yeah, because you're at the end of the day, this is not a hobby.
Yeah.
You know, insurance, I left a good job to go open this up. This was a long-term plan. Same with, you build this to be a real estate, not just be like, hey, I'm going to be here for a year and I'm in and out. Like, this isn't a business to get rich fast in. It's
Right.
just never the same. Real estate, you can make a couple of transactions, but you need the referral base. All these, what people don't understand is what you have to do to build a client base
Yeah.
without a brick and mortar business. It's not like people are coming to support you like Donut Bank,
Right.
right? Like brick and mortar, they can come there. They may do one transaction with you a decade.
Yeah.
And I think people have a hard time understanding, like, we get told no all the time. So for me to somebody be like, I'm leaving, like, okay, it's like, it happens.
Yeah.
But I think people don't understand sometimes that our businesses are a lot alike because you have to build based off you and then fit to who you're with. Like Tucker works for you.
Yeah.
Like Goosehead works for me. And I would never say a bad thing about, Farm Bureau or State Farm. The same way that you and I had a conversation about an ERA agent the other day.
Yeah, absolutely.
Like those conversations happen. And it's the world we run into that people don't understand. Like we're all similar.
And I think the thing is, if you look at like TV shows or, how real estate's portrayed in, TV or movies or other media, same with like insurance. Like we're salespeople. We're these cutthroat individuals who we only care about making the deal and screw everybody else. And I'm like, the true professionals, the people who are super successful in these industries are the people that do not act like that. They're the people that absolutely take care of their clients, but they also make sure that their interactions with the person on the other side of the transaction are also going well. Because I can tell you right now, I have been successful in getting my offers accepted at times in a multiple offer situation where my client didn't necessarily make the best offer, but the seller had an agent that has worked with me before, and that agent says, hey, I know he's going to be great to work with, and we've had the opportunity to get that deal where other people haven't. And interpersonal relationships, not just with the clients, but with the other people around you, are imperative to success.
I send more business to insurance agents than I do anywhere else.
Yeah. Say that again.
I send more business to insurance agents than I do anywhere else. I mean, I still talk to people all the time who I send business to because I specialize in one thing.
Yeah.
If you come to me asking for, someone bought a business, ask me what I would do with it. I said, here's who I would send it to.
Yeah.
And I think that's just part of the industry. And you have to, we're in service. We don't sell.
Thank you.
I don't sell anything.
Yeah.
I really don't. Like I tell you what the quote is, I'm going to walk you through it. But then I'm going to serve. I mean, it's not, we're not getting rich off this. If I sell you a policy for $80 more, think about that. We make $6 extra.
Yeah.
Like, am I really going to upsell you for $6? Like, it's a cup of coffee. And I don't even drink coffee, but
it's so true. I tell people all the time, real estate is sales, but it's a sale of my service. I do some marketing. Obviously, I have to do a lot of marketing of a home when I have it on listing contract, and I have to make it appealing to the buyers and everything else. But if I'm working with a buyer, I'm not selling them anything other than my service of getting them from the point of, hey, I want this house to I've got this house. Because if you walk in and you hate it, I tell people all the time, there is no string of words in the English language that I can piece together to change your mind. So why would I try?
No, it's the same. I always ask people, like, what are you paying right now? Well, I don't want to tell you that, Mike. Here's the deal. The quote's the quote. If it's cheaper with what you have now, I'm not going to convince you to buy me.
Exactly.
Like if we're the same thing and that one's $100 cheaper or the same price, you're not going to switch to me. I understand that. Yeah. So it's like, can I just help educate you on a few things? And then it makes it a lot easier because they understand if they ever have a loss where they're at.
Yeah. And I had an insurance agent one time that did the same thing. Like I had the company was with Erie, the agent, I had been with him for years, and I had somebody just on spec just say, hey man, I want to give you a quote, just kind of run the reps, just see what I could do for him. I'm like, sure, no problem. So he writes it all up, gives me the quote, and I take it to my insurance agent. And I was like, hey man, the premium's looking pretty good. I feel like I'm missing something. And this guy, I'll never forget, he's retired now, or else I give him the shout out and let him know how important he was to me. He called me back and he said, you'd be stupid not to take that policy. He's like, I hate to see you go, but I want to see you protected, and I want to see you save the money, and it makes more sense for you to go with that guy than it does for me.
Done.
And I said, I can't tell you how much I appreciate that. I still sent him business for years after that, even though he told me to go with that other policy, because he put my interest first, and I was like, you know what? This is the kind of guy that I can trust. This is the kind of guy that I like to work with, and he was still on my list of people that I'm like, you need to go talk to this guy and get your quote.
You can't make it in this world if you don't cover people right and you're not honest.
100%.
You cannot make – and same with you. if you lie about something, the age of a roof or something, that damages your brand forever.
Absolutely.
And there can be 5-10 bad comments about you. Like, look, I get that. We have hundreds of clients. You're going to have some bad interactions.
Yeah.
But to understand, like, if you do what's right and you try to do it as often as you can, as much as you can, to the best of your ability, you're not going to lose in that. And I think that's where our businesses are very similar in terms of, I don't really mess with real estate. You guys have a ton of real estate, move a couple of transactions. I'm in the other business trying to close it.
Yep.
Going the completely back end of the spectrum. You guys have to navigate all the stuff on the front end, which people have no idea about. Like, hey, we have to order this, this, and this. Have you got this done? Have you done? Like, a good realtor stays with that, handholds that person for 45 days.
Yeah. And, I would say a good realtor does that. I'd say a great realtor not only does that, but also stays involved after the fact.
Yeah.
Yeah. I could not tell you how much I've enjoyed this. I'm looking at our time now, and I am closing in on the time that I was like, whoa, I got a hard stop, and we're almost there.
I'm in.
Daniel, I appreciate you coming in. This has been a phenomenal podcast. I've absolutely enjoyed having a conversation with you. I have a feeling we will be doing this again at some point.
I can't wait. Can we get something in the red solo cups? It's not this.
Yeah.
Not water. Not Culligan water.
Maybe next time we'll do an episode of Tap Talks. Stay tuned for that. Thanks, man.
Yeah. Don't tell.